Hey, what is going on, guys? It is Easy Weezy here with a pretty interesting video that I really wanted to share with you guys. Um, I have gotten a few questions on like how to sort of start out, like for people that don't have like $1,500 or 2,000 or up to the big ranges in dollars. People that have fairly small accounts but want to make somewhat of a gain. Now, this isn't going to be like, you know, you making $50,000 overnight or anything like that. This is going to be like maybe $1 a day. But the more money that you have, the more money that you're going to make, and the more money that you are also going to be risking. So, how this sort of works is for, let's just say, somebody with at least like $500 or so, and wants to trade stocks. They can't trade futures because I don't think they'll margin anything with $500. So what we are going to be doing is we are going to be looking at small cap ETFs. Now, these relatively don't move that much, but when they do move, it's a good gain. So some ones that I like to trade, in my opinion, one would be oil. Okay, you can buy as well as short, if I'm not mistaken, and basically it will sort of depend on your broker with commissions. I know if you use Robinhood, there are no commissions, but the prices that you get filled in really at market are crap. So you want to do it at limits, but that's a whole nother video. So oil would be one of them. Now this tracks the price of oil, and it is pretty on top of correlation. There is no leverage. Okay, so it's not going to be, double leverage, triple or quadruple or anything like that. So the gains are going to be moderately good, but not, to the point where it's going to be you're blazing $100 each day. So that would be one, is to trade oil with OIL. Yeah, OIL. So it trades at $6.96. So it's going to be $6.96 per share. You could buy 100 of these, and basically you would have $600, near $700 worth of money put into an ETF, which each time it moves a cent, you are going to make a dollar. So if you bought it right here at open, or so to speak, or right at close, and then you held all the way to this, which would be 21 cents, you basically make $21. But this is sort of a long-term strategy when it comes to ETFs like this, and whatnot. Also, another ETF that I had actually put money into, just not on this account, would be volatility ETFs. Now, I do know that some brokerages have actually not, or are no longer allowing people to trade volatility products because of the massive drop that it has had with the volatility spike. But the good thing out of this is that they are really cheap, and once volatility finally goes down, we could see it come all the way back, but I'm not totally sure. Let's see here, if we put this like on a yearly chart, I'm not sure if we could get so yeah, so most likely the ETF is probably crap, but I think you could probably get a couple of good trades in there. But most likely these volatility designed ETFs are basically prone to fail at some point when volatility spikes, and at this point they did crash pretty bad, losing hundreds of billions of dollars all around the volatility sort of market. So ETF, small cap ETFs are the best way to go but there's good diversity. Now another one I do like, which would be Vanguard's bond market, which as you can see it was down, but a really good ETF in my opinion. This does track, if I'm not mistaken, ZN, which would be the 10-year, so it's pretty closely followed. You can basically just pull up a chart here of your 10-year futures, and let me just change here the time limit, and it does track it pretty good. So when this is down, this is going to be down as well. And you could throw this up here onto like a 30-day chart, and you could see that it's relatively dropping pretty hard. Now it could be due for a spike up, or it could continue to go lower. So I would go short on the Vanguard Total Bond ETF. Now it does trade here at $79 a share, or $79.40. So it is going to be a little bit costly, but I honestly don't think that it's going to be a bad trade, or you're going to lose, you're not going to lose your butt on the trade. But shorting this right here, it could be due for a spike. I'm not sure here. Let's throw it up here on 180-day. You did have something like this where it went from 79 all the way up to 80. So that right there could have killed you and made some losses, but relatively it, followed the trend, but know when the trend breaks. And usually ETFs are not the most cheapest thing to buy, but in my opinion, I think they're a lot better than penny stocks. You could throw up a chart of whatever penny stock, and most likely the spreads are just crap, and they're just not a good trade. Most small accounts will get into penny stocks, and they will look at them as like, if I put all my money and if it goes up, I'll make a lot. Yeah, you will make a lot, but the risk is also there of you losing a lot. Like let's just say MJNA, which is a medical marijuana stock. You can tell here, I mean, don't even worry about these spikes because they always get shut down and whatnot. This is pre-market trading, and you can basically tell from like a penny stock, if you were to invest, it's sort of like a decreasing risk factor. Now, if you are going to trade penny stocks, you want to not put all your eggs in one basket, because if you do, and if you put all of your account money into a single stock or a single penny stock, this right here lost 1.96%. You are going to lose 1.96% of your account in a day, and that's not something that you want. You want to manage as much risk. And another thing is AMD. I actually have a couple hundred shares into AMD. Did fairly nice today. Went up 42 cents. I liked it. Find small companies like these, like AMD. There's not a lot of them, but look at IPO openings. That's something that you should really look at. Is look at IPO openings. For like the day. If you go on Snapchat and you follow the New York Stock Exchange one, they cover every single IPO opening. So actually take a look at that. So I'm just going to recap exactly here what we did talk about. So trading for small accounts, small priced ETFs, look at the volatility index ETFs. Those are going to be possibly a big money maker. I'm not totally positive, but they're pretty cheap at the moment, and I think they're a good trade. Another one would be penny stocks. They are risky. If you put all your eggs in one basket and the stock, goes down 5%, your account is going to lose 5%, and that's not something that you want to happen. Also, small price stocks, AMD. There's probably some others out there that I just don't know, but do your research. Google is probably the best source of information for finding small price stocks. And next would be IPO openings. Usually there's an IPO, I think, every day. I'm not sure. And if you're not sure what an IPO is, it's basically when a stock goes public. Like Blue Apron, that's another small stock that you could take a look at. I'm not sure how much it's trading at, but take a look at that. Snapchat is, relatively cheap. I think it's trading at like, around $20. So just look at those stocks here. Take a look at them. Basically, you want to make a best educated sort of trade, based on what you know and what you have available for you. And that's probably my take on trading for small accounts. Usually they want to find something that is cheap, that's going to make them some return or yet big returns, and they want it done quick. But sadly, this is not futures where you can make $1,000 in a night. This is, these are stocks. These are something that you invest in, or you can trade them. But usually small accounts don't make a lot. They can make a lot, but they're usually by people with not a lot of knowledge, and they just throw it all into one basket and then they get drenched. But that's my take on it. Thank you for watching, and have a good one.